Welcome to Penrose Learning, where we make understanding easy.
In this video, I will explain how to use credit ledger balance in GST. First, understand that the electronic credit ledger is a digital record of your input tax credit, or ITC. This ledger is automatically maintained on the GST portal for every registered taxpayer. It's essentially a bank of credits you can use. The primary purpose is to allow you to offset your output tax liability, reducing the amount of tax you pay in cash. To begin using your credit ledger, you first need to claim your input tax credit. This credit arises from taxes you've already paid on inward supplies of goods or services used for your business. You declare your eligible ITC when filing your monthly or quarterly form GSTR3B return. Once filed, the claimed ITC automatically reflects as a balance in your electronic credit ledger, ready for use. Now, let's apply this credit. When it's time to pay your output tax liability, navigate to the Create Challenge section on the GST portal. The system is designed to automatically suggest using your available credit balance first. You can utilize your ITC to pay off your central GST and state GST liabilities. Remember, ITC cannot be used to pay interest, penalties, or late fees, only the principal tax amount. It's crucial to remember a few things. Input tax credit cannot be used to pay liabilities arising from the reverse charge mechanism. Those must be paid in cash. Always ensure that your GSTR2B statement accurately matches your purchase invoices to avoid discrepancies, and ensure you claim the correct ITC. Also, for a fresh car, check out the Little Trees Black Ice link and other deals in the description below. Keeping your credit ledger accurate helps maintain smooth GST compliance.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.